Here's a ranking of the world's richest people. On that list, let's zoom into number 10. Here we see a man known as the Oracle of Omaha, Warren Buffett. This man is considered one of the best investors of all time. He maximized a resource we all have available to us in order to achieve such success. His secret was maximizing the amount of time he invested in the stock market while also realizing compound investment returns. To illustrate this, at age 65, Warren was worth about $3 billion. Today, at age 94, he's worth roughly $141 billion. That means at age 65, he was worth roughly 2% of what he's worth today at age 94. In other words, 98% of Warren's wealth was accumulated since age 65 in the last 29 years. Yes, Warren was an awesome investor. However, his secret was the length of time he had to invest his money. In fact, anyone can copy his secret. The difference is having the discipline to do it. I'll show you an example of how this could look on a much smaller scale. The illustration on your screen displays a hypothetical person that is 23 years old this year in 2025. They will invest $7,000 each year, which will adjust for inflation, so that means it will increase slightly each year. And they will assume an 8% annual investment rate of return. That is technically less than the average stock return over a long period of time, but I always want to be a little more conservative in any type of calculation. We can see here what we call the benefit of compounding, or the snowball effect, in these blue bars over time, because you can see really between this year and retirement, which is age 65, the blue lines barely increase, and then all of a sudden they start taking off exponentially up until age 90, where we can see a difference of more than 5 times the wealth was accumulated between retirement and age 90. The only reason that happened is because there were so many prior years that were able to compound over time to get that momentum going. The latest years make the biggest difference, but you have to invest early to obtain the results of the later years. Begin investing as soon as you can. I promise your later self will thank you in the future. Thanks for listening. We look forward to seeing you in our next video.